Welcome to Common Sense Investing. My name is Cameron, and it's another Monday evening live stream talking about microcap stocks, your favorite microcap stocks, hopefully anyway, because some of them are actually going up right now and doing pretty well. So I hope I will be talking about some of your favorite microcap stocks. My apologies. I missed last week. I was out camping in the mountains, fishing, hiking, kayaking, had a blast, missed the week. One of the best things I ever did. Came back. Now I'm a little bit more relaxed. Nice boring period for microcap stocks in between Q1 and Q2. So my apologies for missing last week, but I'm back. And I'm back with a nice new microphone. So a lot more expensive of a microphone. I hope my sound is better on this one. And I hope everybody out there is making money on microcap stocks right now. As usual, I have a presentation for you. Feel free to ask questions through the presentation. Ask questions. I'll either answer them right away or I might wait until the end, depending on what they are. I've got a few stocks I want to talk about today. I think about 4 or 5 of them. Eastside Games Group, Kraken Robotics, Mind Technology, Trubar, and Glow Life Tech are, I think, basically on the docket for today. But if there's something else you want to discuss, let me know in the comments, and I will get to it when I'm done my little presentation here. As usual, I try to introduce one stock in 10 minutes or less every week on YouTube. Maybe not every week, but sometimes, a video will have, 2 stocks in a week and I cover it off. Basically, I try to introduce investors to about 52 stocks per week. It's interesting because coming back from hiking and camping in the mountains, I have no idea what I'm going to introduce this week. I'm going to go have to take a look around my lists and see which company, which little stock that I like for this week. Last week's or 2 weeks ago is doing pretty well. So a couple weeks ago, I profiled Sanuwave Wound Care Technologies. They're up a little bit recently. That's great to see. Mostly, though, I think this stock that I just introduced last week really talks a little bit about my investing strategy and gives me a bit of a theme to discuss on this week's live stream. I talk about this all the time, how I invest as a microcap investor. Typically, it doesn't always take me a long time to build a quick thesis on a stock. Sometimes that thesis is simply that I'm interested. They have, 4 or 5 or 6 out of 10 of the things that I'm looking for in a company. That's enough for me to continue watching them, and I'll just buy a very small speculative position in the stock, and then I'll watch it. I'll watch the inputs come in, earnings, news, whatever press releases they have going on, CEO interviews, and then with each input that comes in, I evaluate that thesis, original thesis, and whether, I was right, wrong, and whether I want to buy, trim, or sell a stock. Where that becomes important is, I had a very good question because I released a video on a company here last week, Neuraxis, right? Neuraxis is a company I liked, pretty good growth, and they're a company that is helping children 8 to 21 years old with irritable bowel syndrome and other chronic stomach issues with this device here, IB-Stim, and they're getting some insurance coverage to start covering this a little bit more conveniently in 2026, because it's about $5,000 US per pop for each use. Basically a 4-week use of this product costs, I think, $4,780 or something like that. And the very good question I received on X when I was profiling this company is, some concerns here. What about the valuation? Fully diluted market cap is $44 million. Trailing 12-month revenue is $3 million. What kind of revenue growth do you expect starting from January? What is your investment thesis on Neuraxis? And this was such a good question because sometimes I don't think I clarify in that I don't think there's necessarily a black and white investing thesis for every stock. Sometimes I might research a company for 6 to 12 months before I buy my first share, but typically what I do is I might only research it for maybe 4, 5, 6 hours before I buy a very small starting position. And so this is an interesting conversation starter with a company like Neuraxis, because the only guidance that the company really provided is to be cash flow positive by the end of the year. That's all they've said as far as like main goals, financial goals. There's no revenue guidance, there's no earnings guidance, nothing like that. So it's an interesting question when somebody asks what kind of revenue growth do you expect starting from January. One thing I tend to warn investors on sometimes is that I swear some people just make up numbers and people are very willing to believe those numbers. And with a company like Neuraxis, I do feel like I need to, be a little bit negative here. But for some of these companies, I think projecting growth into the future is just guessing. When I see that a company refuses to provide guidance, and yet there's investors out there that will somehow model the next 3 years out for this company at this growth rate, really just doesn't make a lot of sense to me, right? I think people fall for that. So just to be clear, sometimes with a company like Neuraxis, yeah, it's got some things that I like. Yes, it has some concerns like valuation. My investment thesis is to simply buy a small starting position and then continue reevaluating on earnings. And if price is too high, as is the concern here, and this $44 million market cap, fully diluted ends up going to like 22 and I lose half my money, I've just got a very tiny starter position. But that tiny starter position encourages me to take this company seriously, make sure I continue researching it, basically keeps it on my list just to keep watching it moving forward. Right? So when I go to this all the time, I do want to make it clear that sometimes, building a thesis for microcap investors doesn't always have to be a 20-page report that you've spent 6 to 12 months on. Sometimes for me, it's just buying a very small position on a company that looks okay and then watching them after I bought a position for the next 6 to 12 months, right? Do I want to buy more? Do I want to sell that little starter position? I got it wrong. This isn't the company for me. Or do I want to kind of dollar cost average up, or do I start liking this company more and want to buy more? So just a little bit of clarity there. The next theme I kind of want to talk about for this video, I don't know why it helps sometimes to have themes, is that, in discussing Neuraxis and clearing that up a little bit, I try to also reduce microcap investors' stress. And like one of those things I just talked about is by having very small starter positions on companies that are new to you until you're a little bit more fully researched. But the other thing I wanted to talk about in this video, and a theme you'll see in some of the stocks that I'm going to discuss, is having a timeline. It really helps me to have a timeline. I find a lot of new investors have a lot of anxiety in the space because they buy a stock today and by tomorrow they want to be making money on it, or by next week they want to be making money on it. And by tomorrow, if they're losing money, they buy a stock today and tomorrow it's down 2%, they panic and they sell. Or next week it's down 4%, they panic and they sell. And it just creates so much anxiety, so much stress for investors. I want to make it clear that one of my investing strategies that I'll talk about in this video is just making sure that you have a bit of a timeline when you buy a stock, knowing why you're buying it, but also how long you're going to buy it for. So let's talk about a few of these companies. And before I do speak about some specific companies here, not financial advice. I'm not your financial advisor. I don't know anything about you, right? This is just how I invest. And I just like to talk about it. Hopefully it helps some people. And, we grow a little bit larger microcap investing community, which I love to see. Mind Technology absolutely exploded. I was going to say today, but really this started Friday. And this is one of those stocks I've been talking about for a long time. I've been covering Mind Technology from when they were down here at $3 to $4. They went up to just about $11. And then they ended up crashing down. Very volatile stock because this is a very new company, undiscovered, unknown. Not a lot of investors know about it because back here, they had a lot of preferred shares and they were very not relevant to most investors because all their cash was going to preferred shareholders. They changed that, and that's why now this stock is free trading a little bit more. Now, one of the things talking about like conviction and timing, I was talking about Mind Technology back at $3 to $4. I was talking about it at $6, $7. you know, at $7, this company was about 9.5 times trailing earnings per share. They reported their Q1 on June 10th, which was, the numbers were bad and it drove the share price down, but most people didn't understand that the numbers were bad because they had a couple orders that were delayed, and if those orders had come in, then the earnings would have been much better. Basically, this is a company, when I look at timeline, I've been patiently waiting on Mind Technologies because I always believe that, fair value or close to fair value for this company was somewhere around the $10 to $11 share price, right? So when I make up that decision in my mind, basically I'm taking it on that as far as a timeline for this stock, I'm willing to sit here and wait for a year. I'm willing to sit here and wait for audited annual earnings to show improvement or not, and to see with those audited annual earnings if share price can get back up to what I would consider a fair value price for this stock. So when I have that much conviction in the stock, my timeline can go out to about a year for a company. Sometimes with microcap stocks, I'll go up to about 2 years. With Mind, I'm sitting at about 1 year. Now today, it's getting to the point, may not have to wait that long. It's up 31% during the trading hours. The nice thing for me to see, though, is it's actually holding that price after hours. So I was worried we get that dip of people saying, oh my gosh, I made 30% in a day, it's time to sell, when they get home from work and after hours trading is available to them. Nobody did that. It actually still went up after hours. So that's pretty good. Hopefully we see a follow-through day tomorrow on Mind Technology. Why that might happen, one of the things I've been pointing out with Mind, they've been getting significant institutional buying. This one is from 2 months ago, 33.5%. I expect that when they report their institutional ownership at the end of June, which will probably be reported in July, that they're probably going to be in the 40s at the very least, maybe closer to 50% institutional ownership. I'll show you why in a minute. Mostly, they had a little strategic review going on. I do potentially think that Mind Technology is a candidate for a buyout, but in the meantime, they're still running the company very well. They've had this recent press release talking about a collaboration agreement with GWL, where they will be developing their float size system for commercial deployment. So this company is still finding innovative ways to grow. Good, profitable company with cash, no debt, finding ways to grow. So why I think that potentially institutional ownership will go up? Well, now the quant rating should be much better. This is all from Seeking Alpha, but basically Wall Street likes the stock, said it was a strong buy. Seeking Alpha analysts like the stock, say it's a strong buy. There has been growing institutional ownership. One of the things that's been driving me nuts with Mind Technology, and the reason why this share price went from $11 all the way down to just under $6 recently, which was crazy in my mind, was this. When institutions were not buying Mind Technology, it just wasn't getting any order flow. It was mostly driven by $600 buys from retail traders is what was happening with Mind Technologies. So whenever institutions weren't buying, share price was volatile, share price was going down because you just had such thin volume from very weak shareholders. What's been happening recently, this is today for Mind, right? $182,000 purchase, $138,000 purchase, $127,000 purchase, and then all of these purchases today were all over $50,000. There was no cross trades, there was no block trades, it was all open market buying and open market buying up. Some of these I expect have to be probably institutions or large funds. These are not retail investors. So more buying pressure on Mind Technology. I think that's fantastic. Now, if you're watching this Monday evening, June 23rd, the other good news with Mind Technology having the share price run is this is right before a presentation. They're participating in the iAccess Alpha Virtual Best Ideas Summer Investment Conference on 2025. This is available. There's a webcast here, June 24th. Right here is the link. I will post that link down below in the pinned comment after this video So if you're watching me this evening about Mind, you're thinking about the stock, you can go watch that investor conference tomorrow. And then they're going to have one-on-one meetings with investors on June 25th, the next day. So I hope with Mind that we finally see some follow through. This thing does go actually back up to $10 to $11, which I think is a fair value price, or a lot closer to where this stock should be moving forward. And yeah, I like it, especially since it's been down to $5 or $6 lately. It's been one of my top stocks, Mind Technology. Another one of my top stocks, interestingly enough, Kraken Robotics. And this one's just more fun. Behind the scenes at Kraken Robotics in episode 4 of East Harbor Heroes, airing on CTV's USA Network tomorrow, June 24th. So June 24th is looking to be a fun day because I can go watch Mind Technology at an investor conference, and then I can go watch Kraken Robotics on East Harbor Heroes. Now, this is a Facebook link. I was not able to get this video to show it here. There's just a little like intro video because I don't have a Facebook account, but I will definitely be trying to watch this tomorrow. That's interesting and just fun. It's really fun to see a stock that's making you money. It's a good company, but to get some attention like this and show up on little TV shows and stuff like that, especially, okay, from an investment perspective, it's in the USA, so maybe it does drive share price up a little bit. Interesting for me and Kraken Robotics. Kraken Robotics has been a fun stock. This one's been a fun stock for me too. And this is Glow Life Tech. This is kind of a cannabis company. They have a product, it's called MyCell, and what that does is effectively you put it into liquids and it makes whatever you're trying to distribute into the human body more absorbable into the human body. So in theory, if you add their MyCell technology to vitamin C even, you would absorb the vitamin C a little bit quicker and a little bit better than just taking vitamin C regularly. Now, of course, where do they apply this MyCell technology at the start? Because there's a lot of money in it, if you get it right, cannabis. So Glow Life Tech has these Mod and Decimal brands. Those are their two major brands that they're selling. You know, recently I've been covering, you know, what is it here, Glow Life Tech at around 4 to 5 cents, up to about 6 cents per share Canadian. Recently they went up to about 8, 9, almost 10 cents. Very interesting. This guy, I am a shareholder of Glow Life Tech. I got greedy. I was like desperately trying to sell my shares at 10 cents when it spiked up here. There's no takers. I think it peaked at about 9.5 cents. It's now recently down to 4.5 cents, 5 cents today. It's getting kicked in the teeth a little bit because there has been some association between Glow Life Tech, cannabis, and what happened was simply solventless, hash, right? So you could see here the decline, and then right here is basically when all this accounting stuff started popping up with the ticker HashV, and they've been suffering because of it. But the company has been improving. They just released a press release today. Commercial update expands to 1,000 stores in Ontario. I believe their last update, they were only up to about 850 stores in Ontario. I think they only have about, what, 700 or 800 more stores to go in Ontario. So they probably need to expand at some point to another province. And they achieved the #2 oil brand with Mod in the province of Ontario. So pretty significant milestones. The company seems to be improving. These are some really fun graphs that they provided in the news release because there's no actual y-axis here. Like there's no y-axis. So we don't know what this means other than over time they are selling more. We can't really tell from this graph how much more, but I mean, it does look good. And if we look here, this is January 1st for the Mod brand, and this is January 1st for the Decimal brand. So pretty significant growth in a short amount of time. You know, we can't forget that they're able to do that because it wasn't very long ago, March 25th, when they expanded their production line, or they have the ability to expand their production line, and they could triple production on their Mod line if that becomes available. But there's something I want to talk about here. why was I trying to sell at 10 cents and I still like the company at 5 cents? This is a hard one to say. JGGCDN. Glow will likely expand to new provinces at this rate with only about 700 stores left in Ontario. Right. So around 700 stores, that makes sense. And what I wanted to show here is that this is my old graph, basically showing that over time, this company has been getting 40% sequential revenue growth from quarter to quarter. If they continue that, we still need to be patient with this company because it's going to take till early 2026 until they get about $9 million of annualized earnings. Not sure why my pen, I can't draw anything. Oh, there we go. I'm drawing again. It's just on a very short timer. There we go. Okay. So why this becomes interesting to me, one of the things that's been holding this stock back for so people understand is that they have a lot of options. They have 14.1 million options here, exercisable at all different prices, but that includes the price of, 5 cents, 6 cents, 6.5 cents. So this is a bit of a drag on the stock, but these options don't expire until 2029, 2030. The main thing here, though, is their warrants, right? They got 62 million warrants that are expiring in the next 9 months. All of those warrants, 2 million at 7 cents, but they have 20 million warrants at 5 cents, 39.4 millions at 5 cents. That's a lot of warrants in the next month that are potentially expiring. 20 million expiring here, October of 2025, 40 million expiring March 24th, 2026. Over the next 11 months, they basically have all 70 million warrants that are going to be expiring. So that's something to consider as what has been a drag on this stock. But that's why I kind of wanted to go back and talk about timeline. When you're investing, make sure you pick a timeline, because on a stock like this, I find that too many people, they bought it at 7 cents, 8 cents when it was going up. It's going to the moon, not understanding, not doing the research and understanding this warrant overhang. For me, what I like about Glow Life Tech is this year right here, 2026. So in late 2025, what we're going to see is, can the company continue this growth of 40% quarter after quarter? We're going to be able to see that through the rest of 2025 or not. Can they continue doing that? And then in late 2025, we're going to see 20 million warrants either expire worthless or get executed, and the company has a bit more cash, as well as the company has delivered a goal of being cash positive in 2025. So we have these things to look forward to in 2025. But the real opportunity for a company like Glow Life Tech is probably 2026, because at this point, if they continue this growth, we're talking about an $8.5 million market cap company with, by that time, if this growth continues, they will have about $9 million of annualized annualized revenue, $9 million, which puts us a little bit or a lot closer to a fair value for this company, as well as potentially by early 2026, they're going to have warrants either expiring or getting executed for cash. So this is one of those companies that I don't really stress out day by day, week by week, or week by month. If it's bouncing around between 5, 6, 7 cents, 4 cents, I really have some timelines here that I'm focused on for a company like Glow Life Tech. And really the potential here, I think, for this company is how much patience you have, because this is a company that's looking like, if it breaks out in share price, probably late 2025 or early 2026. Trubar. Now, it's interesting because, as an investor, I think you get, you're biased, you get too attached to the company. That is definitely not me. And that's the same with, if you don't like a company. All I really care about for the most part is making money. I don't really care if I like the company or I love the company. I've always poked fun at Trubar here. I've never liked them. I used to call them my arsenic-filled cancer sticks. because Trubar here, just one example, and I know they've changed it a little bit now. They've taken out some of these seed oils, I think. But when I went to Costco, I was always buying Larabar, which just had 3 ingredients, dates, peanuts, and salt. Whereas Trubar, all these ingredients, I just do not like the bar personally. However, I can get over that if I think it's going to make me money. And I'm in the way of this graphic, but basically what this is showing is that, I like these setups sometimes where share price of a company is going down and its potential and execution seems to be going up. That's something I like to watch for in the microcap space. Stock Avengers today, recently talking about Trubar here, and I'm starting to agree. Companies starting to grow on me as it seems to be improving while the share price is going down. And what the Stock Avengers is doing here is talking about this company that was bought out, FitCrunch, basically talking about what revenue that they were doing, the revenue multiple that they were bought out at. Because remember, this is ultimately the goal of Trubar, is to grow this Trubar brand into scale and then get bought out by somebody, right? And if you compare that acquisition to Trubar, if they hit $100 million in revenue, what the Stock Avengers is saying here is using those comparables that was used on that last company, what was it, FitCrunch? Then the Stock Avengers is saying that that's a $3.95 to $6.43 share price range in the buyout scenario at $100 million in revenue if Trubar can get there. So that's an interesting thing to talk about. Yes, I was right. FitCrunch is the name. Basically with some comparables, and the Stock Avengers says, the scale's already in motion. $100 million isn't a moonshot. It's a milestone, so it is achievable. And then watch Q2. That's a good point. The other thing I will be talking about here is why watch Q2. Well, Stock Avengers also points out they got a new VP of Global Marketing, Natasha Port, who, has pretty good experience to hopefully get Trubar to that $100 million revenue. But the other reason, the main reason that I wanted to talk about why watch Q2, why is everybody talking about Q2 for Trubar? If you look at Clarus Securities, who put together some valuation models and expected revenue and earnings for Trubar, and I will zoom in here. What we're looking at for Q2 is that, Clarus expected 10.2 million of revenue in Q1, and Trubar produced 10.16, so pretty close. Clarus also expects 20.2 million of revenue in Q2. So watch Q2 is what the Stock Avengers was saying, and the comparable from Q2 of last year is only 6.76 million. So essentially, if Trubar can report that 20.2 million in Q2 of 2025, their headline numbers are going to be something like 198% year-over-year revenue growth and 98% quarter-over-quarter revenue growth from the 10.16. So there's going to be significant eyeballs on this stock if they can hit that $20.2 million of revenue, maybe a little bit of adjusted EBITDA, but mostly I think people are looking for a little bit of growth for Trubar here. And that's the question, right? I like Trubar. I was talking about them here. I actually bought a few shares. I sold my shares up here because it's not my favorite company. I didn't really like Trubar. Down here, I think it's getting interesting again. It's nice to put a few more eyeballs and interest on Trubar and their upcoming Q2. Eastside Games Group, Eager, is going up. I mean, you look at the technicals, buy and a strong buy, kind of similar to Mind Technology recently, where it was trailing down. Well, kind of similar, not that similar. It was trailing down for a long time, going down in share price as Eager. And, recently it's got a share price bump. And that's good to see, because one thing that people may not realize, and it's fascinating and frustrating to me, talking about timelines and timing of microcap stocks, it's important, because I made a video on Eager a year ago, middle of June of 2024. Share price was at 80 cents Canadian. I liked the company at that time. They had risks. They were doing a lot of the right things. Share price got cut in half. Recently, they were down to about 40, 42, 44 cents Canadian. They are now back up to about 57, 58, 59 cents Canadian. And this was all timing. Timing of microcaps is important. An interview from Small Cap Discoveries has got some eyeballs back on this stock. Hopefully it can recover back up to that, 80 cents or higher. But I like this company for a while. It's just other investors did not. It's interesting going back through time for me, because from my video on Eager a year ago, I had this list of some of my favorite stocks. And, some of these have worked out extremely well. Kraken Robotics, Well Health Technologies went up to about $8, $9. They're back down again, but they did go up. Gatekeeper Systems, I think, is a triple from this video a year ago. Enterprise Group, at least a double. There's been a few losers. ADF Group did not do well. Payfair did not do well. AEP, Atlas Engineered Products, and TMG did not do well. A few of these are kind of sideways, like BQE. But I mean, NTG Clarity Networks is up something like, 15x since this video last year. So it is fun to go back in time. I love reviewing some of my old work, trying to figure out how I can get better, moving forward. Why are people excited about Eager, Eastside Games Group? They just reported first quarter 2025 financial highlights. They're not great. We'll talk about that. But what people are getting excited about, RuPaul Match Queen is showing strong metrics in soft launch, and we are excited about its worldwide launch for the second half of 2025. This is a gaming company. They produce games for smartphones, right? So they put a lot of expenses. They put a lot of cash into these games up front. And then if those games are successful, they produce a lot of cash for a long time with those games. So one of the problems I've had, one of the frustrating things, is that when I made my video on Eastside Games Group, they were ramping up. This is the quarter that I made my video on. They had 20.8 million in revenue, income before tax, 1.5 million. Everything was looking great. Ever since my video from a year ago, they have done very poorly. Revenue has declined, operating income has declined, income before tax has declined. What has not declined is cash. They do produce a lot of cash, and they now have another game coming online, potentially, that could do well, that might bring them more cash. So they're becoming interesting again. And what I always liked about this company was very low total compensation for management here, right? So I like that. There's a few things to like about this company, but really still a bit high risk, because so much remains related to their success on this RuPaul Match Queen game that should be out, and we should start seeing some numbers coming in for Eastside Games Group and where they can go. So out of all those stocks, what's your favorite? I'm done. What stocks do you want to talk about now that my presentation is over? I got time for some questions and answers, talk about some other stocks you want to talk about. Don't forget, if you want to join my platform, commonsenseinvesting.ca, that will introduce you to my Discord, Patreon, and Substack. And if you enjoyed this, don't forget to give me a like and or subscribe. And I'll go see what everybody's been talking about. See what everybody wants to talk about. Let's get some comments on the page here and get this like and subscribe off the page. Let's see here. Happy Monday. Hopefully some of you are owners of Mind Technology, up 31% today. Also, what was up today is Zoomed. Did you notice Zoomed was up 7.5% today, back up to about $1.24, $1.25 Canadian. That's good for Zoomed as well. If mine gets up to that hypothetical $10 or $11 range, do you consider selling, or do you view Mind as a long-term hold? So for me, I mean, personally, and obviously not financial advice, I'll just bring up the chart again here and talk about that, if I can go find it, because the answer is always like, it depends, right? It depends on what's going to change between now and then. I always thought fair value was around here. I'm not necessarily that willing to sell on fair value. I tend to sell more if a stock is overvalued. If it's fair valued, I tend to keep it. But in saying that, what I tend to do is keep my core position, whatever I decide that to be. And that's the amount of money I'm willing to hold long term, because I am more of a long term holder of Mind Technology, mostly because I think they get bought out. And if they don't get bought out for a good price, this is also another company in ocean exploration, which I think is a huge and growing new industry. So I think that the industry they're in has a lot of potential. The company itself has a lot of future potential, and or potentially they get bought out at a premium and I'm happy, right? So I'm not that willing to sell. In saying that, I do tend to trim my positions. Like up here, I think I trimmed about 10 or 20% of my position. When it went up to $10, $11, I was like, okay, it's time to de-risk. It wasn't a choice to sell because I thought the company was performing poorly. It wasn't a choice to sell because I thought it was overvalued. It's just time to de-risk because my position size got so large. I trimmed about 20%. But then what happened is I ended up buying it all back and then a little bit more once it went down to this $5, $6, $7 level. I ended up taking all the money I spent trimming up here and spending it back on Mind Technology back down here. So the answer for me usually for selling is it depends. I try to be more of a long-term shareholder of good companies. But again, for me, I always hate it when people just say, well, that's all I do is I'm a long-term holder. I'm buying all these stocks and putting them in my coffee can and forgetting about them for 10 years. That's not what I do, right? I build my thesis and then I reevaluate those inputs over and over and over and over, and I make that decision. And so I did decide to trim Mind when it went up to 10 to 11 bucks, but then I just rebought it all. And that's because the company was improving, similar to what I just kind of showed with Trubar. Basically, the company was improving on Mind Technology. The share price was going down, and that all of a sudden, when I reevaluated my opinion on the company, it went from being, oh, I better trim here to de-risk my portfolio, to like, well, it's massively undervalued again, so I'm gonna buy that back. So yeah, with a company like Mind, I've got pretty good conviction in it. It helps when they're in a good industry. And so I haven't been selling. I've been more holding to see if they actually get bought out. I've previously said, like, you know, a little bit of blue sky here, but I do believe if Mind Technology gets bought out, potentially it could be for around $15 a share. So it's tough to think about selling at 9 when I've got it in my head that fair value, sale price fair value for the companies, probably around 15 bucks. Now I might have to wait a year for that to happen. Might have to wait 2 years for that to happen. But I mean, it's still a double. It's hard to turn that down. And if I'm wrong, then, you know, the stock, the company is still doing well. So I'm happy with that. ADF earnings was okay, but I'm still concerned about the future. No deal with the USA yet, and the Prime Minister's talking about EU, big producer, Canadian partnership. Look, if there's a company that could possibly get screwed around by politics more than ADF Group, please let me know, because this company has just been dogged around for the past, 9 months now, due to politics, due to elections and contract delays and tariffs, no tariffs. So one of the things that's come out with ADF Group is that they have very little to almost no impact from tariffs. So when we talk about a deal getting done, I'm not necessarily sure what deal that people want done with ADF Group. What the company has said is that as long as they're using U.S. steel, sourced U.S. steel, there would be no tariffs on it because it's U.S. steel. So they might have to change where they source their steel from, but it would just bring them in line competition-wise with other U.S. companies doing the same thing as them, except they have the advantage because their labor is in Canadian dollars and they have robotics. So they should be able to source U.S. steel, use U.S. steel, not have to pay any tariffs, and still be able to underbid the U.S. competition because of the Canadian currency and their robotics. So I've always liked ADF Group. I think deep down the company is good. I'm not a huge fan of management, but I think the base company of what they do is good. I've always been frustrated because people call it a cyclical company. If you go look at their revenue, it's never cycled down except when Donald Trump implements tariffs. That's the only time their revenue has ever cycled down. And that's typically hasn't been necessarily tariff involved so much as contracts just seem to stop. New bids seems to stop, right? So I mean, the narrative has changed on ADF Group where 6 months ago, everybody hated this company. Everybody hated this stock. Now it's changing. Everybody seems to like it again. Everybody seems to see some potential. Is there a 50% gain here? If it goes from $8 to $12, that's pretty attractive looking. What would be fair value if they can get around tariffs, they still have a nice looking backlog, and they still get really good margins. This is still a really good company. So I'm frustrated with ADF. It's made people money recently because it's gone from like $6 to $8. I still think $8 is not enough for ADF Group. I think people are more afraid than they should be about this company, but I thought that back at $12 or $13, and I was wrong because it went down to like $6 or $7. And you're right for hash, so that's simply solventless. Maybe the new ADF, good news, CFO is out there looking for a new one with strong experience. I like this. Just add a small position, and we'll do it over time throughout the year. Look, do not underestimate investor sentiment for microcap stocks. It can the changing narrative on a stock can completely change price more than any earnings, more than any press release. If a company goes from like, oh my God, this is the greatest company in the world, it can run up to share prices that are ridiculously high valuations that make absolutely no sense. California Nanotechnologies last year, right? $1.95. That made no sense. Once people get it in their minds that this company has a moat, it's the greatest company in the world, they're willing to pay just about any price. When the narrative changes and everybody hates this company and nothing they can do is right, and just nobody wants to look at it anymore, at the same time that share price can come crashing down to a level that's unreasonably cheap. And as much as it's hard to do, sometimes as investors, you need to remove emotion out of the equation, look at the facts, look at the share price, and is there opportunity here or not? Because look, somebody bought ADF Group at $5 recently. It went down to $5. It's now up to $8. Somebody made a shit pile of money on ADF Group, even though most people are underwater on that stock right now, right? So it is about timing some of these microcap stocks, and do not ignore investor sentiment. Do not ignore the narrative around some of these companies. It can make a huge difference. Do you check Organto Food, OGO.V? Looks like a good small cap to follow in an industry that needs competition. No, but I don't have a pile of questions right now, so I can go take a look and just give a little 10-second peek at this company. Let's set it up here. OGO, Organto Foods. Oh, geez, look at that rocket up. It's interesting sometimes, right? 7 cents to 43 cents. Now $48 million market cap company. What do they do? Let's see here. Engages in the sourcing, processing, packaging, distribution, and marketing of organic and value-added fruit and vegetable products. It's interesting because I like a company called The Fresh Factory that does something like that. So I'm not going to say that it's a no right off the bat due to that. Looks like they've got growth. They struggled coming out of COVID here maybe a little bit. They were getting growth, and then that growth, I would need to explain to me why that dropped from 22 million to 14 million. What the hell happened here? But ever since then, they seem to be getting growth, starting to hit some kind of inflection point with EPS where they're going from -47 to -2 cents per share. So they're getting there. Only a $48 million market cap on 30 million of revenue, pretty weak underlying earnings, 34 million shares. That's not bad. Some things I like, maybe a little bit overvalued, right? $30 million of revenue with pretty weak transition to bottom line. Of course, I'd have to go look at all the, like dig in deeper to the numbers. But to me, that just briefly looking at this right off the bat screams to me that where this stock benched somewhere in here is probably fair value. And for some reason, my guess is they had some announcement and people got super excited and decided to drive share price up a little bit above, over and above fair value. But I mean, that's just a 10-second analysis of this company. There's a lot of things I like here. 114 million shares, that's quite a few shares. That's a big problem. Only 8% held by insiders. So a couple things I also don't like. Typically not my favorite type of company. So they would have to be outstanding to show me that this is something I'd want to buy, you know, significant revenue growth. But again, if I look at this company down here, you know, I would need to go explain this cash flow because that's pretty ugly. So some things I like, some things I don't like, maybe worth looking at, but they would need to be really good considering, you know, not necessarily one of my favorite type of industries. Producing food, distributing food is hard. There's competition. You have to find the niche that works for you. Margins are typically low. So, you know, they have some speed bumps that they would need to get over to impress me, this Organto food. But growth looks to be there, and they do look to have, like, there's an inflection point coming up. Time to interview OmniLight Management. Yeah, I talk to David every once in a while at OmniLight. Good company. I like OmniLight. They own 7 million shares of California Nanotechnologies. They're now sitting at $1.15 Canadian per share right now. I think that's undervalued. I mean, we need to talk about at some point, maybe I do this on the next live stream, cyclical stocks are coming back. Cyclical, these manufacturing stocks are starting to come back, right? You look at a cyclical stock like Symmetrix. Let me get this comment off of there. You know, Symmetrix went down to 17 cents. Symmetrix is now back up to 30 cents. Symmetrix is a company that installs cellular concrete, so manufacturing industry, right? When we look at OmniLight Industries, they're a manufacturer as well. You look at the 1 year on them, yeah, it looks a lot like Symmetrix, right? They were up to, you know, $1.80 not too long ago. Same with Symmetrix. They tended to bottom out here right after the Trump takeover when tariffs and tariff threats all of a sudden became an issue. Symmetrix has rebounded a little bit better, and OmniLight still seems to be stuck down here. I think that deserves a rebound, right? We just talked about, you know, DRX, ADF Group, you know, another quote unquote, not that I always agree with it, but cyclical stock. You know, looks like Symmetrix, looks like OmniLight. It's been downhill. It kind of bottomed out here in April, and since then it's rebounded. Not quite as much as Symmetrix again, a little bit more like OmniLight. Rebounded a little bit, but has it rebounded enough? Either way, what we're seeing over and over and over is these manufacturing type companies are starting to show that April potentially was kind of the bottom, and they're starting to recover. So we may be on somewhat of a cycle up, at least I hope so, for some of these stocks. And I think some of them are worth a little bit more of a look, including OmniLight. I like that company simply for the safety. They have a lot of cash, 3.4 million cash, $7 million of California Nano shares. I just hope that they don't have another excuse for their next quarter as far as, you know, why earnings have been struggling. They've had a couple struggling quarters. Will you hold NTG Clarity for a long term? I just showed you my slide. It depends. It depends. You know, something needs to change. NTG Clarity Networks went up to, what is it here? $2.85, right? Let me just pull it up for you. Take a little look. NTG Clarity Networks. I don't know if I really have to answer that question yet or not with NTG Clarity Networks, right? There's their 5-year chart, stunning. But I mean, if we zoom in more to the 1-year chart, they went up here to $3. And when they hit $3, somebody said, that's fair value, right? It's time. I didn't necessarily sell. I did sell some, I believe, and I think other people had the same idea, right? When it hit $3, I think the analysts have it at 325, 330, something like that. So when it got close here, people were, the markets were bad. We just remember we hit the bottom there on so many stocks in April and May. So many stocks were losing people money. And, NTG Clarity Networks went up to $3. So what's happened is that people trimmed, people sold, people took their profits, people de-risked their portfolio, and now it's back down to about $2.20. It doesn't help that recently they announced a large contract again, another $11 million contract, but it doesn't help because of the Iran situation. Now it looks like the Iran situation is de-escalating. Obviously, NTG Clarity Networks operates in the Kingdom of Saudi Arabia, so they have some geopolitical risk. If something erupts in the Middle East, it looks like it's de-escalating. All of a sudden, 220 doesn't look like fair value anymore, right? If people were selling because this looked like fair value and they wanted to de-risk their portfolio and take some profits, 220 looks a little bit cheap. So, look, I will say that if NTG Clarity Networks rebounds to this price again, I would head back over to my little chart, reevaluate all the inputs, take a look at whatever earnings have come in to basically drive the share price up again, and kind of make a decision from there. But I do think, around the $3 mark is probably a little bit closer to fair value for NTG Clarity Networks. When it comes to my decision on whether or not I hold a company for the long term, it's hard to say, because the other question is, do you have a better stock out there? Sometimes it's not about whether I want to sell a stock like NTG Clarity Networks. It's about whether I think, okay, it's now at $3. Maybe I think it can go to $4, but I've got this other stock here that's at $1. I think can go to $3, right? So that's when I start pulling from some of my winners to fund the next generation of stocks that I think can perform like NTG. So that was a very long answer for a very short, simple question, but it always depends, right? Current thoughts on WELL Health Technologies. I noticed substantial stock buybacks over the past month. I haven't looked at it. One of the problems, this sounds very weird. I actually bought shares of WELL Health Technologies recently, and I haven't looked at the stock. So do as I say, not as I do, right? I'll bring it up though and kind of show you why. I have stopped watching WELL Health Technologies because their accounting is so bloody complicated. I'm not going to pull up their accounting for you, but they have multiple different companies with multiple different CEOs accounting for revenue and earnings in multiple different ways. One of the advantages as a microcap investor, as a small average microcap investor who works a day job and kind of does this as a hobby on the side to make a little bit of alpha money, is microcaps need to be simple. My investments need to be simple. The company needs to be simple. I need to understand the company. Maybe the product's simple. Maybe whatever it is. Maybe it's just within my realm, my circle of experience, my circle of trust that makes this company simple. WELL Health Technologies has done everything humanly possible to make themselves not simple. They're very hard to follow. They're very hard to track. So I've given up trying. It takes too much of my time. I can go through 10 different earnings of 10 different stocks for the time it takes me to go through the earnings of WELL Health Technologies. I did end up buying shares recently because this is one of those companies that every time it seems to go down in price, it seems to rebound back up. And I mean, they're producing over $1 billion of revenue. Their market cap is under $1 billion. And I mean, I have been following this company since before COVID, and I've seen it just do this over and over and over, down, up, down, up, down, up, down, up. It's on another down kind of, what did I just say about narrative? Everybody hates this company. Everybody hates this stock. Most retail investors have no idea when they release earnings, whether they're good or not, because they're too complicated. Analysts, institutions haven't been buying it. All I know is that WELL Health Technologies is at the same share price it was at in 2024, It's at the same share price it was at here in 2022, the same share price it was at here in 2023, and the same share price it was at here in 2020. And the company, again, I don't want to go back to that slide, company's been improving. I don't care what people say. Yeah, some of the numbers are more challenging and hard to understand. Company has been improving, share price has been declining, and so I just bought a few shares almost to cheer them on, because I've been following this company for so long, and it seems like every time they dip in share price, something happens to move them back up. And yes, they do a lot of good things. The reason they've been buying back shares is because WELL Health Technologies used to have a lot of share dilution. They used to have a lot of share-based compensation to management that was in the form of RSUs that resulted in share dilution. They made a commitment to stop that share dilution, but it's taken them a couple years to stop issuing share-based compensation. You can't just happen overnight, right? They got to have board meetings and get everything approved. So they've been reducing their share-based compensation dilution, and to counteract some of that share-based compensation dilution, they've been doing a lot of buybacks. So growing company, producing cash, and share prices going down. Legend Power Systems, upset with them right now, right? Not necessarily their fault, but one of the things with Legend Power Systems is they're fairly highly valued, right? This is 14, 15 million. They were recently, $20 million market cap company. They only produce, I think it was less than $1 million of revenue. So valuation was high. This company's share price was always high based on investors expecting contracts to come in on their technology. SmartGate, it's called. And SmartGate is a product that reduces power grid spikes in buildings. A lot of potential if it works. The city of New York likes the product. The U.S. Department of Defense likes the product. And because of that, everybody has thought, well, it's just getting started. This company's at an inflection point. All these contracts are going to come in. Revenue's going to skyrocket up. Contracts are going to drive up earnings, and everything's going to be great. And we've been sitting here throughout all of 2025 with nothing. And so when a company is at a certain valuation due to investor speculations, and the company does not deliver the communication that meets those investor speculations, what's happened is it's effectively dropped in price. And right now at 10 cents Canadian, we are now at the 52-week low for Legend Power Systems. It's concerning. I like this company. On their last earnings call, I really got pumped up. I thought, my gosh, I should run out and buy this one. I'm just going to wait and see. I think I did buy a few shares, just a little position. That was at, I think, 10.5 or 11 cents, and now they're down to 10 cents. So the problem is, what has happened to Legend Power Systems? The answer is nothing. There hasn't been contracts. There hasn't really been communication on that. We need to see that, start to execute here in 2025. Any thoughts on Gatekeeper's continued vertical line? Feels like a big future contract win is starting to get priced in. Look, I love Gatekeeper Systems. I've interviewed Doug many, many, many times. I've talked about them a lot in the past. Absolutely congratulations to shareholders who have made money. At the same time, this doesn't look natural, right? This company was trailing down. They've had some challenging EPS earnings per share has been declining. They've had really good communication with investors lately, communicating all the new contracts that have been coming in. I thought that was fantastic. I think that's really good, or was a really good thing for Gatekeeper to do, and should have brought share price somewhere kind of in this range. But right now they're just about at $1. I don't necessarily short microcaps. I've never shorted microcaps. I think it's a stupid thing to do, but I would go take a look at their earnings. When their earnings are going to be coming out, what you expect from their future earnings, because at $85 million, that's a lot of expectations for Gatekeeper. If they don't release, it's similar to Legend Power Systems, right? share price is up on people's expectations. I don't think this share price really matches what the earnings are for Gatekeeper. That's the same with Legend Power Systems. You know, if you look at their earnings, they're not worth a 20-cent share price. It's really people's expectations. And when you get people's expectations up this high, you better start delivering. So Gatekeeper, definitely people seem to be expecting a large new contract coming in. I hope they get it. If they don't, one of the problems is that, you know, it's just about at $1 now. That's insane. I mean, congratulations. I started covering Gatekeeper like 20 cents. So it's basically a 5x stock at this point. Progressive Planet is starting their pilot plant. Any new feelings on this company? I feel like Progressive Planet is a stock that I did not like. So Progressive Planet Solutions, what do they do? Starting a pilot company. Oh, that means pre-revenue, right? Let's go take a look here. Oh no, they get some trailing 12-month revenue, 19.3 million, 1 cent earning per share. What do they do? Why did I not like this company? I don't know. I'd have to go take another look here. 21 market cap's been increasing. Everything looks good there. A lot of shares outstanding. Good insider ownership. They got some revenue. Revenue seems to be flatlining. They got some cash. They got some debt. They got some free cash flow. I don't know. I don't remember why I didn't like this company. What have they done? Up 77% in the year. They haven't done anything for a while. Might be worth another look. I don't actually remember this one, but it's not on my list. So there was something about it I didn't like, or for some reason I passed on it. And right now I could not tell you what that is because it looks like share price is up a little bit, right? Why Hydrovac's infrastructure disappear from my watch list? What? Never even heard of it. Hydrovac's infrastructure. Oh, are you talking about Tornado Global, TGH? Yeah, so you're talking about Tornado Global Hydrovacs. So the reason is that TGH, I'll bring this one up here, has not communicated with me. They're kind of like Kraken Robotics. They seem to be communicating with institutional investors. I've reached out to them 2 or 3 times. They have not responded. I like this company. I like this company down around $1. I couldn't get any information out of them about tariffs, about, you know, Trump and contracts. I mean, this was a company that was highly exposed to tariff risk. They produce Hydrovac trucks in Canada and sell those Hydrovac trucks into the United States. Now, for some reason, you know, large investors, institutional investors, somehow got information that this was not going to affect them, and the company has been executing, and because of that, share price has gone through the roof. But I feel like as a retail investor, I simply didn't have enough information from the company. They weren't communicating well enough with retail investors. So, you know, at this price level, I like the company. They succeeded up here. I have no idea whether I like them or not because I just don't know. I don't know. They don't communicate very well. I haven't seen any CEO interviews. They haven't spoken to me. I have no idea kind of where this company is going. So it's not that they're off my watch list. I believe they're still on my lists on the Discord. It's just I'm not really sure where to put them. Again, as a retail investor, I try to keep it simple. I'm not going to find every perfect stock. You know, and if a company, if I can't get information on it, if I just don't know what's happening, company isn't communicating enough. I mean, company communication is so important. How a company communicates with shareholders, you know, being honest, being transparent without, you know, being too bullish or too promotional, making sure investors have the right information they need to make the right decision is extremely important. And if I'm not getting that, sometimes it's like, okay, this is a good company and I might even own shares, but it won't be a very large part of my portfolio because I don't have the information to make a decision and really back up the truck. And that's kind of what happened with Tornado Global Hydrovacs. I never got enough information to really back up the truck. So it's always kind of been hanging around there in the peripherals. I've made a video on them. I like the company. I couldn't get an answer about tariffs. somebody else did. Somebody else got their answer, and now it's up. Awesome videos. Thanks, Cameron. You are welcome. That is the last comment on today's video. I am over an hour now into this live stream. Time to finish it up. My apologies for missing last week, your Monday evening live stream talking about microcap stocks, but thanks for joining me here this Monday. Hope everybody's out there making money, and I will see you again in a week, and hopefully we have more stocks like Mine Technology was today, right? That would be fantastic. Thank you for the show. Enjoy your week. You too. Appreciate it. Thanks for coming out. Don't forget, give me a like, subscribe if you're new to the channel. If you have any interest in microcap stocks, you know, this is basically what I do. This is my passion, is investing in this space and communicating with other people. So I hope you enjoy it, and I'll see you in a week.